Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Sedan, and this week we're covering the Employee Retention Credit, specifically amending returns to take the credit and some penalty relief that's available. We'll be covering this topic in our upcoming post-tax season update and review webinar. We have available dates and a full list of topics covered in this 8-hour webinar at caltax.com under the Webinars tab. With many business clients just trying to keep their doors open during the last couple of years, they may not have taken advantage of all of the tax benefits they were entitled to, including the Employee Retention Credit. Two issues that have arisen recently regarding this credit are when to file an amended return to claim the credit and penalties stemming from a reduced wage deduction. Many businesses never realized that they were eligible to claim the Employee Retention Credit until their payroll company informed them that they may be eligible for the credit. Firms specializing in Employee Retention Credit refund claims contacted them, or you realized that they may be eligible when reviewing their returns. If a client filed their Form 941 and was eligible to take the Employee Retention Credit but didn't do so, or if they didn't claim all the credit they were entitled to, they can amend the Form 941 to take the full credit. We highly recommend that you review your client's payroll tax returns to see if they might be eligible for the Employee Retention Credit. Generally, taxpayers can correct over-reported taxes by filing Form 941X, Adjusted Employer's Quarterly Federal Tax Return or Claim for Refund, within the later of 3 years from the date the original Form 941 was filed, or 2 years from the date the tax reported on Form 941 was paid. Taxpayers that file an amended 941X to claim an Employee Retention Credit refund also need to file an amended income tax return for the applicable tax year to reduce their wage expense for the amount of the credit claimed. For taxpayers with large Employee Retention Credit refunds, this can result in a significant tax liability due to the decreased wage expense. The IRS has released a notice indicating that taxpayers can claim reasonable cause penalty relief if they owe additional tax because their deduction for qualified wages is reduced by the amount of a retroactively claimed Employee Retention Credit. Or taxpayers may qualify for the first-time penalty abatement program. We recommend reasonable cause penalty abatement in this situation rather than first-time penalty abatement, so the taxpayer has the option of using first-time penalty abatement in the future. First-time penalty abatement can only be used once every 4 years. We cover topics like this in our monthly federal tax letter publication written by tax pros for tax pros to keep you informed on issues that affect your clients and your practice. You can see the benefits of a subscription at caltax.com under the Publications tab. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.